Hi everyone, Moti Marili is here. Welcome to my channel. Today, I want to talk with you on the importance of having an emergency funds. In this channel, my goal is to share with you my journey, to add value to your life, and to be authentic with you. So today, I will show you why is it important to have an emergency funds and what is my strategy on saving for emergency funds. Before we start, please make sure to subscribe to my channel and hit the bell button below so you will be notified every week when I upload a new video. And please like my video and help me rank the video in the YouTube algorithm. With this said, let's begin. 4 years ago, when I read the book Money Mastery the Game from Tony Robbins, I start to understand finance. And one of the basic principles, one of the first steps for financial freedom is to start an emergency fund. Emergency fund is a saving account where you save money for emergency. You want to save at least 6 to 12 months of your monthly expenses there, and you can use this money only for emergency. Like right now, for example, we are in the pandemic time, we are in COVID-19 time, and if something happened for your business and in the result from that, you lost your job or you lost your income or your income went down, that's when you can use this money to pay your monthly expenses, to pay for your rent or mortgage, to pay for car insurance, health insurance, and any other monthly expenses that you have. You can use this money only for essential expenses, and you cannot use this money to buy a new TV or to go for vacation or to buy a new car. You're using it only for essential expenses. You can use this money if you're injured or if something unexpected happened to you or to your business, and in the result from that, you lost your income or your income went down. The first step for you will be to calculate what is your monthly essential expenses, how much money you spend every month on rent, on insurance, and all the other essential expenses that you have every month, all the other bills that you pay every month. And when you find out what is this number, you multiply this number by 6. So for example, if your monthly expenses is $3,000, you want to have an emergency funds of at least $18,000. The second step is to decide how much money you want to save every month from your income. Here the recommendation is to start with at least 10% from your income every month and anytime when you earn money. And if 10% sounds crazy for you or sounds not doable for you, you can think about it like a tax that the government gives you. If the government will raise the taxes right now in 10%, what you're gonna do? You can scream, you can be mad, but in the end of the year, you will pay this extra 10% for the government. So when you start to save for emergency fund, start with at least 10%, and when you will start to save at least 10% from your income, you will start to build the habit of paying yourself first, and anytime when you will earn money, you will put this money in saving and investment. After you have enough money in your emergency fund and you will have 6 to 12 months of your monthly expenses in saving, that's when you can start to invest in other investment channels like retirement plan, life insurance, stock market, and real estate. The next step for you is to open saving account for your emergency funds. Here I recommend to find a bank account that can give you a 0 fees and high interest rate on the saving account. Here I recommend on Ally Bank or on Discover Bank. I love these two banks because they will give you zero fees on your saving account, and they will give you high interest rate compared to the other banks on the saving account. Ally Bank will give you 1% interest rate on their saving account, and Discover Bank will give you 0.95% interest rate on the saving account. I know it's not a lot, but compared to Bank of America, for example, which they give you 0.02%, 0.9% at Discover Bank, it's very, very high. They have great customer service and you can call them 24 hours. Now, after you open your saving account for the emergency funds, that's when you want to set an auto deposit every month. So you want to deposit every month the same amount of money into your saving emergency funds. And to be honest with you, if you are not going to set an auto deposit, most of the chances that you will not deposit the money to there. You probably will do it a month or two, and then after a month or two you will find excuses why you cannot save this month and why this month you have extra expenses. So the best way for you is to set an auto pay, start the saving account and set auto deposit. Those are the 3 steps that you need to know before you start in your emergency funds. The best time for you to start is today, it's right now. Take action, start today your emergency funds and start to build a habit of paying yourself first. And anytime when you earn money, before you pay for your other expenses, for your rent and other bills that you have to pay yourself first. Now let me give you here a few of my personal tips and strategy. First, I will save a month or two of my monthly expenses in cash in my house. It's always good to have some cash in your house for a real emergency. After I will have this month or two saving in cash, I will open the saving bank account and I will save another month or two in the saving account. Now after we will have 3 to 4 months that you already saved, you have 1 or 2 months in your house and another 1 or 2 months in the saving account. That's when you can start to save and invest the money in the stock market. Now I know that the stock market it's risky, you can sometimes lose money there, but in the stock market you have much more potential to have much more better return on your money. In the saving bank account you will get around 1% interest rate on your money, and in the stock market you will earn 10, 15, 20% or sometimes 30 and even higher than that. So we will have much more potential to make much more money there. So after you will have 3 to 4 months that you already save in your house and in the saving account, that's when you can take a little bit more risk and start to invest in the stock market, and this money also can use you for an emergency. In conclusion, in the book Money Mastery the Game, I was exposed to the idea of emergency funds for the first time, and I really didn't understand why is that important until this year when the pandemic hits and my business doesn't make enough money to pay for my monthly expenses. Saving for emergency fund is very, very important. Start today and start to save every month a portion of your income for emergency. Start with at least 10% and start to build the habit of paying yourself first. And when you will make more money, you can save even more than 10% from your income. You can start to save 15%, 20% and even higher than that. And that's how you build your future, and that's how you will build your financial freedom. Thank you for watching me today. I hope I added value to your life today. Please leave a comment below and tell me which bank account you use for your emergency funds and how many percent you save in every month from your income. Thank you very much, and I will see you next time.